Yes, good morning to all of you. Today, let us discuss the profits and gains of business and profession. So, we all know that what is meant by a business. For example, a person who is intended to carry an economic activities and doing these economic activities, the person will earn some lucrates, that means profits. So, whenever the person is earning an income through his business, so he is liable to pay the tax to the government. So already we discussed in the earlier chapters the tax liabilities and how do you impose the tax the government. We all know that tax is nothing but a pool of income to the government to do the welfare activities for the people. So like that is also one of the head. Whenever any person is getting a gain or a profit, either his business or a profession, he is liable to pay the tax to the Indian government. So why you are taking the business income when you want to calculate the business income? So whenever you are calculating the business income, you have to take only the revenue receipts or revenue incomes from your business. Capital receipts will not be considered. Why? Because if you take the land or a building or a machinery, when you use these assets, these are known as the capital expenditures. So these capital assets will not be recorded in the business profit and loss account. We have to record only the depreciation on those assets. Why? Because those assets are meant for to run the business. Those assets are not meant for to sale purpose. That's why, as per the cost concept, every business has to enter in a statement of financial position all the capital assets at historical cost, not at NRV, net realized value. Why? Because when you are not intended to shut down the business, when your business is a going concern concept, so when you feel that the business will be continued for some years, definitely we should record all the non-current assets. Historical cost only, not at NRV. That means net realized value. So if you are intended to sell the asset, your non-current assets, because you don't want to continue your business, if your business is not going concern, so automatically your business is on the verge of insolvency or verge of liquidation. Definitely you have to shut down the business and you have to dispose all your assets and you have to pay the debts to the of the business. So that's what then only you can record your non-current assets in the company's profit and loss account to find out the profit on sale of fixed assets or loss on sale of fixed assets. Automatically, when it is not a going concern concept, your long-term liabilities also will be termed as a short-term liability. So now we have to find the profit from the business. How do you find the business profit? I already told you business income is a nothing but an income which is earned a businessman while making some economic activities or carrying some economic activities. That is buying and selling of goods. So whenever he buy and sell the goods, automatically, if he sells at higher price than the manufacturing price or higher than the purchasing price, so he will derive some profit. So he has to pay the tax. So what I told you have to find the profit and gains of the business. You should take your net profit into your business. So this net profit is already ascertained by taking your revenue incomes and revenue expenditure. What is the revenue expenditure? Revenue receipts means a receipts or an income which is derived through the economic activities from your business. When you are earning an income, definitely a businessman has to spend the expenditure. Without spending the expenditure, no one will do the business. For example, today I sold the goods for 1 lakh. When you are selling the goods for 1 lakh, you have incurred some expenditure like selling expenses or wages to workers or salaries to employees or entertainment expenses. So like that, etc. A lot of operating expenses has to be spent to get this net profit. That's what revenue receipts will be taken into account and you will also be allowed the revenue expenditure from your revenue receipt. That means business income is ascertained after deducting your business expenditure. Otherwise, that is not treated as a business. No capital nature, no capital expenditure, and no capital assets will be entertained here. Only we should record the depreciation on the capital asset. When you are taking the first, you have to take the net profit. What I told, if it is a business income, you will be allowed only the business expenditure. Non-business expenses, non-operating expenses will not be allowed from your business. So, for example, I am telling here, this is your profit and loss. Your net profit is 1 lakh rupees. Your sales 50,000. Your income from house property 20,000. Interest on securities 10,000. And back dates recovered 10,000. Now the total of incomes is 1 lakh. And out of this 1 lakh, you spend some business expenses like salaries, 2,000, rent, 5,000, drawings, 8,000, and other business expenses. For example, 62,000. So what is the net profit? 62 plus 80, 70, 70 plus 77, 77. Your net profit is 22. So your accountant has already credited your incomes and debited your expenditures. When you are taking your business income, you have to take only your business expenses as allowed. Not allowed expenses means which is not related to the business, that should not be debited to your profit and loss. In case if your account debits any expenditure which is not related to your business, that is treated as inadmissible expenses, or it is called as expenses not allowed. For example, let's take the net profit. How much? Your net profit is showing as 23,000. What I told, add the expenses not allowed. Expenses not allowed. Not allowed means which is not related to your business. When it is not related to your business, it is not allowed. When it is related to your business, it can be allowed. For example, you take salary. Salary means, is it business expenditure or non-business? Business. Why? Because you have to pay the salary to your employees. So this is allowed. Rent. When you are doing your business in a rented premises, when you are using that premises for only for business, then the rent is also allowed. But out of this rent, if the proprietor has taken a house for rent and 50% is used for business and 50% is used for personal. See, here your rent is dedicated how much? 5,000. How much percent is using for business? 50%. How much percent is using for your personal? 50%. Business is allowed. That means 50% rent is allowed, 2,500 out of 5,000, and remaining 50% is treated as not allowed. Why? Because out of this 5,000, only you are utilizing for business only 50%, and the remaining half% you are for self-residence, for you and your family. So therefore, the 50% is not allowed. How much? 2,500. If you run the business in rented premises, if the total house is used for the business, then total rent is allowed. But if the house is used partly for business and partly for your residence, own residence, then only 50% is allowed and 50% is not. In the same way, salary. If you pay the salary to the employees, it is allowed. But if the owner takes the salary, how does the proprietor take the salary from the business? No. He is entitled to earn the profit. He is not entitled to draw the salary from the business. He has to pay the salary to the employees. So proprietor salary is also not allowed. Why? Because proprietor is taking the salary that is not allowed. For example, if there is a 3,000 rupees proprietor salary, not allowed. If any amount used by the proprietor for personal use, for example, I already told you the rent. In the same way, expenses, for example, a fire insurance premium or land revenue, ground rent, these are all related to the house. If the house is used for business, then all expenses are treated as business expenditure. If the house is not used for the business, if it is also used for the personal, only it is allowed proportionately. Only business, up to what extent you are using that house for the business, all the house expenses are allowed up to that extent, and remaining 50% or 30%, whatever it may be you are using for personal, that is considered as not allowed expenditure. So this is the first one. After taking the net profit, you have to take the expenses not allowed is to be added. Why? Because already your accountant has debited the expenses not related to your business. It should not be debited to P&L. But your accountant already debited your drawings near 8,000. That implies that your profit has comes down because of recording the non-business expenditure. It is a personal expenditure. It is a non-business expenditure. How would you enter your personal expenditure in your business P&L account? So it is not allowed. Drawings is not allowed. Why? Drawings is a personal. If I pay my daughter's education fees, my son's education fees, is it business or personal? Personal. So if I pay the son's fees or a daughter's fees or daughter marriage expenses, that cannot be supported, and no accountant should enter such expenditure in business P&L. When it is entered, that implies that it has been deducted from your profit. So whatever the amount should not be deducted, it has been deducted. Therefore, it should be added back to your net profit to know the real profit of your business. That's why we have to add all expenses which are not related to the business. They are treated as inadmissible or they are treated as expenses. In the same way, another one. I told you capital asset. If you purchase the machinery, your accountant has written machinery 60,000 in your P&L. What is this machinery? This is not a revenue expenditure. It is a capital nature. This machinery is used for 10 years or 15 years or 5 years, basing upon its life. How could you decide it is a revenue? It is not a revenue expenditure. This is a capital expenditure. This will not be allowed. What you can allow is, you can allow the depreciation. Only depreciation is allowed. But machinery costs 60,000. This is the machinery capital expenditure is not allowed. So it should not be debited. Your accountant has been debited the capital asset here. It means your profit has comes down. It is added back to your net profit to know the real profit. In the same way, income tax. Income tax is paid on your personal income. Income tax is paid on your personal income, individual income. Income tax not allowed. But customs duty, excise duty, import duty, export duty, these are all related to the business. And another GST, goods and service tax. Goods and service tax is allowed. Why? Because it is a business. When you send the goods, you have to collect the GST from the customer and you have to deposit to both the government, state as well as central government. But income tax is a personal income, personal expenditure. So this is also to be added back to the net profit. Next one, bad debts. Bad debts is a common in the business. It is a business expenditure. It is allowed. But provision for bad debts, no provisions, no reserves will be allowed unless it is really occurred, unless you really face that loss, unless the bad debts has occurred in your business, then only it is treated as business expenditure. But provision for bad debts or reserve for doubtful debts is not allowed as a business expenditure. Even you records in your P&L account, the auditor will round up. Why? Because it is not happened. When it is occurred, then only it is treated as a loss of the business. Otherwise, it will not be treated as a loss of business. And in the same way, some other assets, patent rights, copyrights. So patent rights is also a capital expenditure. If you acquire the patent rights with effect from 1st April 98 or before 1st April 98, patent rights is also a capital expenditure, it is not allowed, but 25% depreciation is allowed on patent rights. And in the same way, technical know-how, that is also, you have to allow only depreciation, that is also a capital expenditure. Or if you start any projects, eligible projects, all expenditures relating to your projects, if you want to secure the license from the government to start your project. So whatever the plans or whatever the license fees you paid, what is the registration fees you paid, and what are the permissions you want to acquire to start the project, all expenses are treated as project expenses, business expenses, they are allowed. But non-project expenses, which is that project is not related to your business, it is not allowed. Only if it is related to your business, then only. And another one is preliminary expenses. I think you know what is meant by preliminary expenses. That is nothing but a blueprints or a plans or before starting a company or establishing a company, you have to prepare some important documents like MOA and AOA, Memorandum of Association and Articles of Association. These documents has to be filed before the registrar of the company. Then you have to spend some expenditure. Those are the preliminary expenses. Preliminary expenses is given in your P&L account, only 1/5 is allowed. The remaining 4/5 is not allowed. Only up to every year it is allowed only up to 1/5. For example, if they are given a preliminary expenses, 10,000. How much will you allow this year? 1/5. 1/5 is allowed means what is not allowed? 4/5 is not allowed. That means 8,000 rupees is not allowed. So why? Because when you enter 10,000 in your P&L account debit side, automatically your profit has comes down. But there is a not allowed of 4/5. So that will be added back to your net profit to know the real profit of the business. And another one, insurance. I already told you insurance. If you insure your stock of the business, then it is allowed. For example, you are doing a dairy business. What is the dairy? Dairy farm. You will have the cattle. Because the cattle are the assets. The cost of cattle will not be entered because it is a capital expenditure. But you have to insure your cattle in case if any untoward incident occurs, if any floods comes, or due to natural calamity, if your cattle dies, you have to face a lot of ample of loss. In order to avoid this loss, you have to insure your cattle. That is also a business expenditure. It is allowed. But if you take the insurance on your life, LIC, is it allowed? No. Life insurance premium is not allowed because it is taken on your personal life or the life of your family members. It is not considered as a business expenditure. If you insure the stock, or if you are running a dairy farm, if you insure the cattle, because the cattle are the source of the business, the life insurance on the cattle is allowed, but life insurance on the owner and the family members is not. So if you are given an insurance, you check it whether the insurance is related to business assets or the personal of the owner. If you have to know all this, very important to calculate the business income. So insurance on business assets is allowed, business stock is allowed, but personal life of the proprietor is not allowed. Next one, health insurance. If you pay the health insurance to your employees, it is allowed because employees are your source to get an economic, to derive some economic benefit. So anything paid to the employee is allowed, but anything is paid on the employer's life is not allowed. If I take a health insurance premium, I'm the owner of the business, that is not allowed. If you're all my employees, If I pay health insurance on your lives, it is allowed. Why? Because it is my business. Next one. Another one is employer contribution, either to provident fund or to the gratuity of the employees or any benefits of the employees is allowed. Gratuity is relating to the employees. Provident fund, I already discussed in salaries. Statutory provident fund, unrecognized provident fund, recognized provident fund, public provident. These are all when you contribute towards the employees, that is allowed. When the employer, that means owner, if I contribute myself in some provident fund account, that is not allowed. If you pay the PF to the employees, it is allowed. If you pay the gratuity to the employees, it is allowed. If you pay the encashment of earned leave to the employees, it is allowed. So after retirement, the employer has to pay a gratuity to the employee. What is gratuity? Gratuity is nothing but which is paid by the employer to the employee for his past services who rendered in our business, in our factory. కృతజ్ఞత అన్నమాట. ఎందుకంటే వాడు మనకి సేవ చేస్తాడు కాబట్టి ఆ కృతజ్ఞత మనం ఇస్తాం, గ్రాట్యుటీ అంటాం. సో దిస్ ఇస్ కాల్డ్ యాజ్ ఎనీ అమౌంట్ కాంట్రిబ్యూటెడ్ టు ఎంప్లాయీ ఈజ్ అలౌడ్. బ్యాడ్ డేట్స్ ఆల్రెడీ చెప్పాను. అలాగే ఇంట్రెస్ట్ ఆన్ క్యాపిటల్ అనదర్ ఇంపార్టెంట్. Interest on capital means which capital is allowed? Only borrowed capital is allowed. Interest on, yes, interest on own capital is not allowed. You have to remember when the interest on capital is given in P&L account debit side, see that, verify that it is borrowed or own capital. If the owner has invested from his own pocket, the interest is not allowed. But if I borrowed the loan from either banker or any financial institutions and invested that money in my business, then it is allowed. So interest on borrowed capital is allowed. Interest on own capital is advertisement. Advertisement is a business. It is allowed. But if the advertisement expenditure exceeds 10,000, it should be paid by check, not by cash. If you paid any advertisement expenditure exceeding more than 10,000 through cash, that is not allowed. Below 10,000 or up to 10,000, in cash is accepted. But beyond 10,000, if any advertisement expense is paid in the way of cash, that is not allowed. And another one is loss on sale of or theft of your animals. You have started one poultry. So in the poultry, due to some virus, the animals were dead. It is your business loss. It is allowed. But if a proprietor dies and the family has spent some funeral expenses to that proprietor, that is not allowed. It is a personal. Operator's funeral expense is a personal. But loss on your animals, loss on cattle or theft. If cattle sometimes it has been theft by some other people, then it is a loss. It is allowed. And the next one, any expenditure related to the business is allowed, but any expenditure related to personal of the owner is not allowed. For example, family planning. Employer has paid a family planning expenses on behalf of some ex-employee. It is allowed. Why? Because you are spending for the sake of the employee. But if the family planning, if the proprietor goes for the family planning, and if the proprietor has spent 40,000 or 50,000 for his family planning expenses, promotion of family planning, that is not allowed. Why? That is your personal. So what I said here, expenses not allowed is to be added. Expenses not allowed is to be added. Why? Because it is not related to your business. So, for example, all your expenses not allowed may be 20,000. What is the value? 40. And coming to the next head, the expenses allowed but not debited to P&L account. So the next head is expenses allowed but not debited to P&L account. For example, you are given a profit and loss account. You purchase some fixed assets. I told you fixed assets will not be entered here because of capital expenditure. What will allow? Depreciation on machinery, 5,000. According to IT rules, there are specific percentages specified by the income tax rules. According to that regulations only, you are empowered to claim the depreciation rates. Beyond that, you are not empowered. Depreciation on machinery is 5,000. This is your business expenditure. Your accountant has to enter in profit and loss account. Depreciation on machinery 5,000. But your accountant has not entered. Your net profit, for example, may be 10,000, 23,000. 5,000 has not entered by your accountant in your business P&L account, though it is a business loss, though it is a business expenditure. So an expenditure which is relating to the business but not entered in the profit and loss account, it means not deducted from your profits. So your profits have been increased. To know the real profit of the business, whatever the expenditure is related to the business, not debited to P&L account, it means not deducted from profit, you should deduct. That's what expenses that is called allowed but not debited to P&L account. Bad debts, for example. Bad debts is a business loss. Compulsory the bad debts needs to be entered in your P&L account by your accountant, 2,000. But your accountant has not entered. What happened? When you didn't debit the 2,000 rupees in your P&L account, your profits has gone up. That is not a real profit. It is a manipulated profit. The shareholders may be misled. The stakeholders may be misled because of not recording such business losses or expenditures. Due to unrecord of this expenditure in your P&L account, your net profit has gone up. To know the real profit, whatever the expenditure is not debited, that means not deducted from profit, you have to deduct. Bad debts. So, for example, depreciation 5,000, bad debt is 2,000. So, what is the total amount? 5 plus 2. This 7,000 is a business expenditure. It should be debited to business P&L account, but your accountant has not been debited. When it has not been debited, means your profit has gone up. To know the real profit, you have to deduct. 2 plus 5, 7. 43 minus 7, it will become as 36. Come to the next head. Minus incomes not allowed. The next heading is incomes not allowed. So now you are calculating business income. You have to take only your sales. Sales is your business. Closing stock is your business. Commission received on your business. Discount received is your business. But when you are having house property, what you will get? Rents. Is the rent received is the business? No. So the rent of house property is taxable under the head income from house property, not under the head income from business. So rental income. So rental income already in your accountant will be credited in your profit and loss account. The rent received 2,000. What will happen? It is not your business income, but your accountant credited in your P&L account. What happens? It is a other income. Other income should not be entered in your company's profit and loss account, but your accountant entered your other incomes in your profit and loss account. Due to this, what will happen? Your incomes has gone up. For example, your net profit is 10,000. Now your net profit is showing because of recording this other income 2000. Now your net profit is 10,000. How could you enter the other incomes in business income? You are not supposed to enter the other incomes should not be created in your business P&L. So when it is created, automatically the profit has gone up. If you want to know the real profit, you have to deduct the incomes which is not related to the business. If it is created in your business P&L account, that implies your profit has gone up. In order to know the real profit, that should be deducted. That's why incomes not allowed is to be deducted, or inadmissible incomes are deducted. Rent received. You deposited some amount in bank. What you will get? Interest. Interest on fixed deposits. Are you getting this income by business? No, it is not the income through the business. But your accountant created interest on fixed deposits. Your profit has gone up. That should not be included in your business income. It is to be deducted. Interest on fixed deposit. You purchased some shares in other companies. What do you get? Dividend received. If you purchase the securities in any other company, you will get interest on securities. Or if you win a best couple award, or you winning a best couple award, or winning a horse race, or puzzles, winning of puzzles, and winning of card games, these are all comes under the head income from other sources. Those are not the businesses. Those are all taxable under the head income from other sources. Other sources income should not be included in business income. If it includes, it is to be deducted to know the real profit of it. For example, gift from your parents. Gift from customer is allowed. Gifts given to customers is allowed. But gift from father is not. Because it is a personal. So, if you deduct the incomes not allowed, for example, let's assume that total incomes which are not related to business is 20,000, then what is your business income? 16,000. In the same way, other head provision. I think provision is nothing but there are different provision is different from business. Business motto is to earn the profit. Provision motto is to earn the provisional income. If you take doctors, lawyers, auditors, teachers, professors, these are all provision. So this is different. Whereas coming to the professional income, you have to add up all the professional income and you have to deduct all the professional expenditure. It is very simple. You can get to find out or to ascertain or compute the professional. If I am a doctor, as a doctor, what is my income? Consultation fees, sale of medicines, surgery income, hospital patients, rooms rent. These are all my professional income. Cost of surgical equipment, that is a capital expenditure. I purchased one X-ray machine. That is not allowed. What do you allow on the capital asset? Depreciation. I purchased some Canon. That means scanning machine. That is also an asset, not allowed. What will you allow? Depreciation. Doctor incomes is to be added. Doctor expenses is to be deducted. Other lawyer is there, advocate. Lawyer's fees and clients. You will collect the fees from the clients. That is lawyer's income. The client's expenditure. That means lawyer's expenditures. He has to file a suit in the court. He has to pay some fees, court fees. He has to prepare some documents. He has to spend some expenditure. Auditor. He will get a fees from different companies or from the different business people. Auditor income is the audit fees. So auditor also has to spend some income, some expenditure to get that income. So all professional expenses will be deducted from professional incomes to get a professional income. So we can discuss that at the evening. Thank you.